Today, we're going to talk about Bitcoin and the case for $50,000 in March. I know it sounds crazy, but there is a pattern that is setting up for that potential. So I'll show you what the market has to do to confirm that. And we'll also talk about the DXY as well as the Tethered Dominance chart because it is showing something very interesting. Now, if you guys are enjoying this content, be sure to subscribe to the channel and click the bell icon to get notifications because I am releasing these videos every day, Monday through Friday. All right, so let's start out with the BTC daily time frame. So this is what we've been talking about now for quite a while, this area down here around 35,000. So there has been a lot of confluence in this area. You can see where we have the intersection of several lines here on the chart. We have a horizontal support down here. This is the area that I was talking about back in January that had to hold on a daily closing basis. It did, and we got that move up toward 46. All right, so once again here, we got to move down toward this area, right around $34,000 to $35,000 and a significant bounce yesterday. Okay, right when everybody thought the market was headed toward $30,000, the market bounced significantly. In fact, just in a few minutes, it went from about 36,000 all the way up here and reached just below $40,000. Now, the key here at the moment, and I want to make this clear, because once again, this is not saying that everything is a-okay and the market is guaranteed to move higher. First of all, there are never any guarantees in the market. Second, Bitcoin has to get back above 39,600. That's the level I've been mentioning now for the past few days and for good reason. If you look back here, this area was support here, support on this candle, resistance through this area, and then the market has broken back below it, not only on a daily closing basis, but also on the weekly chart. Okay, last week, this candle right here closed below 39.6. So it is imperative to see Bitcoin get back above this area on a daily closing basis and preferably a weekly closing basis to signal that this down here is a false break and trigger that move higher. So until it does, things are still a little bit dicey. That's important to remember. You still have to be a little bit cautious while the market is below 39,600. Now, I want to show you what I'm looking for in March. Okay, this potential setup that could have Bitcoin trading up toward the $50,000 area over the next few weeks. So right now, if you just look at this chart, you can see where we have two lows down here. Now, this is a potential double bottom for the market, okay? The confirmation for this, though, is not only a close above 39.6, okay? That's step one. Step two is a close above $46,000. That's the high from back here, okay? So this would be the neckline of the double bottom pattern. So we would need to see a daily close above 39,600, also a daily close above the $46,000 area. That would expose this area up here between 50 and 53,000. Okay, now this has been a key level on the chart for the past few months. You can see where back here it was resistance, support, support, and resistance once again. Okay, now what's interesting about this is that the objective, okay, for this double bottom, if you take from down here right around 35,000 up here to the neckline at 46, you get a measurement of just under $11,000. Now, if you measure higher from 46,000, okay, up here, you get an area somewhere right around $55,000 to $56,000, which is obviously very close to $50,000 to $53,000. Okay, so right now, again, 39.6 is going to be step one. The 46 area is the second step. Do that, and we are likely looking at a Bitcoin up toward the 50 to 53, maybe as high as mid 50s next month. Okay, now obviously the more bearish side here would be if Bitcoin loses this area down here around 35. Okay, so if we do see the market rotate lower and it fails to climb above 39,600, we see it rotate lower and take out this area down here, and especially this $35,000 level, close down here, then yes, we are likely headed down toward that $30,000 14-month range low. But until that time, we are seeing some nice volume come out here. We got a nice rejection yesterday off of this area. So I think you have to respect the potential for a move higher, especially if the market does reclaim that area right around 39.6. So buyers are by no means out of the woods yet. However, I am still respecting the potential for a move higher, just considering the aggressive bounce we saw yesterday. Now, let me show you one other thing before we get into the DXY. And this is something that could come into play next month, and it could prevent Bitcoin from getting all the way up to the mid $50,000 region. So if you look back here, we have a potential trend line off of these lows from all the way back here in August of last year. Now, if you connect this trend line with some of these lows and the recent highs, Okay, this is really interesting because this trend line runs parallel to this one down here. Okay, so this trend line down here is parallel to this one up here, and you can see how significant this has been here over the past few months. So this could technically prevent Bitcoin from reaching this $50,000 area if we were to see the market reclaim 39.6 and then come up here to this region between, let's say, 46 and 47. This is going to be a key region for the market, because if it can't get above this, then obviously we're not seeing a Bitcoin head back up toward the mid 50s. Okay, so this is going to be significant as well. So not financial advice, but if you are looking for a long here, and let's say Bitcoin gets back above 39.6 and you play a retest of this area, this region up here is going to be key. So it might make sense to take a little bit off. Again, not financial advice, just my opinion, but it would probably make sense to take a little bit off up here around 46 or 47,000. Now, some of you may be thinking that this trend line right here represents the neckline of a head and shoulders pattern. Now, I don't think it does. In fact, I'm going to just outright say it doesn't, because this over here was never a right shoulder. So this is something people have been talking about. And this right here absolutely does not qualify as a right shoulder just based on this pattern. But this doesn't qualify as a right shoulder, because if we had seen Bitcoin do something more like this, then yes, you could say this over here is the right shoulder, and then it would look a lot more like a head and shoulders pattern. But as of right now, this right here is not enough to qualify as a right shoulder. This was just part of a downtrend within this descending channel. So this is not a head and shoulders pattern in my opinion. This is clearly just a downtrend. We've now had some consolidation here. And again, this area around 46 is going to be significant, but I don't think it is the neckline of a head and shoulders pattern. All right, so let's go ahead and move on to the DXY, the US dollar index, because this is going to be key. Now, yesterday we saw a big move from the US dollar, and this was on the back of obviously the Ukraine invasion. So the market was in a risk off mode. So we saw the US dollar rally, put in a new high up here at this trend line. Now this trend line is incredibly significant going all the way out to the monthly time frame. So if you look here on the monthly chart, you can see this trend line goes all the way back to 2011. So the market was finding support here, okay, over the course of about a decade. It broke down back here in 2020, and now we're having a bearish retest of that level as new resistance. So what is going to be key here for the DXY, because we need to see it move lower for risk assets like cryptos and Bitcoin to move higher. So what's going to be key is, just like I've been saying here recently, we need to see a move below this May trend line, because so far, ever since May, we've seen higher lows from this market. So we need to see the market carve a lower low, take out 95.13, take out 94.60 in order to carve that first lower low in the market and give us that confirmed reversal. Now, I do want to show you one thing that is pointing to some exhaustion here for the DXY, and I've talked about this recently, but yesterday's high gives us a bit more information on this, because we did see the market make a new high on the chart. Okay, so we're having higher highs here from the DXY. However, if you look at the RSI so far, we've had this series of lower highs in this market. Now, obviously, this recent one isn't really fully formed, but if we do see the RSI continue to come off, the market comes down here toward the support area, then it does look like we have a confirmed, okay, bearish divergence here from the RSI. So this right here points to some early exhaustion from the market. You can't really time a move with divergence like this, but it does indicate that here over the past few months, the DXY is starting to become exhausted. And one last chart I want to show you before we wrap up is USDT.D. Okay, so this is Tethered Dominance. Now, what's interesting about this is clearly we've had an uptrend here ever since 2018. So what this means when this market is moving higher, it means that the market, okay, the crypto market is basically pulling their capital out of Bitcoin, out of Ethereum, out of any risk-based asset, okay? They're moving it into a stable coin, Tether. So what we want to see here is this market start to move lower like it did back here and also back here. So every time this market moves higher, Bitcoin is moving lower, okay? That's how it's been here over the past few years. So what I'm looking at now, what's really interesting about this is that we have this channel here, and if you look at the fibs based on this channel, the market found resistance back here at the 786 fib, and now look where it's finding resistance, okay, right here at the 618. So it's starting to kind of make these not necessarily lower highs at the moment, but based on this ascending channel, it's moving down within these fib bands, okay? And that could be a sign of weakness here for the Tethered Dominance chart, which would be bullish for cryptos. And another thing here too, quickly, if we look at the highs here recently, this does look very similar to what we saw back here when the market topped out, okay? So notice the two highs right here. So this one and also this one. Notice how we got a lower high here in the market before it rolled over. Same thing right now. We had this high, and now this week so far is putting in a bearish pin bar, and this high was lower than this one back here, okay? So it looks very similar to the price action we saw at the last peak. So if this market starts to rotate lower and take out some of these lows, okay, we get that reversal, then Bitcoin is going to start to move higher along with Ethereum, etc. But the way this chart is set up, I would not be surprised if later this year we do get a significant move lower from the Tethered Dominance chart, which would indicate a significant bullish move for cryptos. Because again, based on this channel, you can see where the market is moving down within these fib bands as it moves higher. So that could be a sign of exhaustion to where if we were to see the Tethered Dominance chart come off later this year and break out of this pattern, then we could see Bitcoin move toward those all-time highs, which I know sounds crazy to many, many people right now, but that's also kind of why I like the idea, because not a lot of people are expecting it. In fact, the majority think that everything is in a bear market. We're not going to see all-time highs this year. We're going to have to wait till the next halving to see any kind of bullish price action. So again, it's all very speculative right now, but when you combine this with the DXY that I just showed you, some of the exhaustion patterns we're seeing there, this does start to take shape. So we still need confirmation, but the early signs are there. All right, so that's it for today's video. Just keep in mind that with Bitcoin, it needs to close above 39,600, not necessarily today, okay, but over the next few days, it does need to reclaim that level. I would preferably like to see it do it this week. I would like to see a weekly close back above that level to confirm that last week's close was a false break and expose that $46,000 area. All right, guys, I hope the video helped. If it did, be sure to subscribe to the channel, hit that bell icon, smash the like button, and leave your comment below. I will talk to you guys again soon.